Good evening, traders. Today is Thursday, February 23rd. I've waited until futures has had a chance to declare itself and provide some more clues as to what's going to happen tomorrow. But the first thing I want to show you is what the vast majority of traders see. As you see here, it's obvious. They are lower lows, as I've circled. Lower low, lower low, lower lows, lower lows. Looks like these big red candles here are getting bigger and bigger and bigger and bigger. Looks like we're going to crash. The vast majority of the feedback that I'm getting from others who are telling me on Twitter or YouTube, bearish, bearish, bearish. We're going to crash. Seasonality says it is over. But what you guys don't actually realize, those who are bearish, by the way, what you're actually looking at is a bullish setup. There's a 900-pound gorilla in the room, and you don't even see it, but it's hiding in plain sight. You are completely missing the forest from the trees. You want to see what I'm talking about? I don't see this lower lows. I don't see this gradually increasing red candles. I didn't see this big imminent crash that's coming based on Fed speakers or bad economic news or earnings that have come out. Forward guidance, negative. Everything looks so bad. And seasonality also says we're supposed to go down. You want to know what I see? It's a broadening wedge, megaphone. I also see consolidation for the last 3 trading days. 1, 2, 3, under the weekly EMA 50 lines, including SPY futures EMA 50 line. Consolidation, multiple attempts, 1, 2, and tomorrow will be the 3rd attempt. I also see the bottom today. How do I know that's the bottom? Because every time I've been preaching to you guys, we have a higher low notch on the 1-hour MACD. It's solidified the bottom today, and it's solidified the bottom of this broadening wedge. And when you are now consolidating under major EMA weekly EMA 50 line that you're going to see more details up with in a second, that's bullish. That's bullish, as I've always been saying. It's also sandwiched between the 1-hour EMA 50 right here. Here's the 1-hour EMA 50 and the 1-hour SMA 20. And look at that. It doesn't even need to find support on the SMA 20. That's hidden bullishness. So it is sandwiched. It is consolidating. It has bottomed. And where is the next logical direction after it has bottomed on a broadening wedge? Up here. Ta-da. Okay? That's what you guys don't see. Instead, you see lower lows. You see seasonality. There was a 900-pound gorilla sitting right in the room in the last 3 days, and now you see it. SPY extended hours tonight. Wick up, wick up, wick up. Green Thunderbolt. Think they're planning for something tomorrow? I think so. SPY futures, as of about 15 minutes ago. 1-hour MACD, now above the 0 line. Still sandwiched between the SMA and EMA right in the middle. Oh, you bet it's getting ready for tomorrow. You bet it is. Anyone want to argue with me that that's a bearish configuration? I don't think so. So, I need to give a shout out to the group on Twitter. They get the credit for identifying that broadening wedge. I didn't see it. They called it out. Okay, so kudos to you guys. You guys get the credit. I'm not taking credit for that. I totally missed that broadening wedge. I was focused on the the consolidation or under the channel, the EMA and the SMA. I was too focused on all that stuff. But you guys called it out, and now that makes total sense. Why they used, not that they reacted to, they used the Fed speaker excuse as justification, not because of anything the Fed speaker said. That's why I don't watch the news. They use it as an excuse or justification to take it down here to complete the bottom of the broadening wedge. How do you like them apples? Okay, so you guys are great. You guys always give great feedback on Twitter, and I do appreciate that because, as I said on Twitter, multiple heads are always better than one. It's great. The enemy of my enemy is my friend. Good job, guys. Keep going. Now, I'm going to show you why tomorrow is actually very critical in determining the next path. But before I show you guys, I'm going to once again prime the pump on what a failed backtest looks like. You're looking at it right here. See the body of this candle traverse? You can see it. You can see the EMA 50 line going right through the bottom of that body. You can see it right there, right? This is a failed backtest. It's a failed backtest. Backtest failed. Because what happened? What happened on this failed backtest? What happened after that? Down you go. But let's look at an example of a successful backtest when the body of the candle closes equal to or higher than the EMA 50. As you see here, there's just a little bit of daylight right there. You can see it. That's a successful backtest. And what happens after a successful backtest? Up you go. Okay, so I just wanted to go through those two examples of failed and success. Because what you are looking at here, right here, this is the weekly chart, weekly EMA 50. That weekly EMA 50 is exactly 40139. SPY closed at 400.66 today. We have one more day. For this uptrend to stay intact, let me show you this, what I showed you earlier. This red line right here, 40139, is equivalent to right here. What SPY has been consolidating under for the last 3 days. And what is now sandwiched between the EMA and the SMA on the 1 hour chart. Oh yeah. Oh yeah. It's waiting for tomorrow's PCE number, isn't it? But something tells me that number is not going to matter because it's already positioning itself to go up. And we're going to find out tomorrow once and for all. I think it's positioning itself to complete the top end of this wedge. For this uptrend to continue tomorrow, Friday at 4 p.m., the closing price must be at or above 40139, because that would complete the back test in that example I just showed you. This whole thing has just been a matter of technical back test. That's it. No news, no earnings. It's a technical back test. At 40139 tomorrow must hold. If it does not, you have a failed back test by technical analysis criteria. That's it. It's black and white. That's it. If 40139 holds tomorrow and it closes above this number, next week, let's just say Monday, next week could open below, or next week could go below 40139, because it matters where you close on Friday of next week, not where you open. It very well could on Monday. You could have a successful back test. It closes at 40140 on Friday tomorrow. That's fine. That means so far so good. But then on Monday, you can go down to 400. That's okay, because you still got Tuesday through Friday to close that candle. Ha ha ha. But if that candle closes tomorrow above 40139, something tells me that fourth week ain't going to go down. There you have it, guys. It's just straight TA at the end of the day, man. It's just numbers. That's what I've been preaching all along. But some of you guys like to talk to me about the news of Russia, the economy, earnings. You're gonna see in a tweet later on. It's like you're gonna tell me today's pattern had something to do with Fed speakers talking, scaring the markets? No, not at all. Today's Fed speak was just to justify going to the bottom of this wedge, where I called the bottom. I said, "Oh, that's the bottom right there." I called it on Twitter. You'll see it. Had nothing to do with the Fed speakers. They were planning this thing all along. This wedge started here and it started back here. But it started here and it finished today. That's it. It's just numbers. It's just algorithms. This is the intraday chart, 5-minute. We're going to get into the details of what has happened from the beginning. Okay, man, this is a shallow back test that I was talking about right here. That was right here, right here. SMH, I was like, okay. I was expecting it to back test to the red line, but okay. This would prove, yeah, you'll see other tweets, but okay. I said, man, this is shallow. Just for now, just notice that I called it out. And then after that shallow, I saw that big. I was like, you know what? Let's just go ahead and scale long. Right here. So I scaled long. But I also tweeted a little bit later. I kept thinking about it, like, huh. I don't remember the last time at opening bell it shallow back tested to SMA 20, not needing EMA 50. SMA 20, EMA 50. See, now you can hear me. You can see me start to have some buyer's remorse, second guess, as I say here. And you know me, I know dates. I remember dates when things happen, when certain trends change, and I don't remember this. Okay, so now you start to see me second guess, like, okay. Okay, here we go. After it got rejected, then it came down to the EMA 50. Here we go. Now the EMA backtest is here. Okay. See, at this time I took the screenshot. All right. See, now I'm like, yeah, okay, now it's, yep. Okay, wicks up, waiting for the next candle to close green. That would have been right. Oh, right here, right here. Okay. So, wick up, wick up, wick up. That is a sign of strength, as I've said in previous videos. Wicks up is always good, always. So I said, you know what? I'm gonna go ahead and scale some right here, right here. So obviously we know what happened after that. It's called manipulation. After that, okay, it's called justification. However, now that hindsight is 2020, had I realized that it was a broadening wedge, I might have actually anticipated that. Like, I think this sucker's gonna go down, down. Okay, like, huh? See, that's a lesson learned for me next time. That it would have had nothing to do with Fed speak. Had I caught or been aware of the broadening wedge yesterday, like, oh, that's a broadening wedge, I would have, and I would have cautiously done this differently, right? Had nothing to do with the Fed speaker today. It's a broadening wedge. See what I mean? Nothing to do with Fed speakers at all. Okay, I mean, I'm calling it out. Look at the wake up, wake up, wake up. I was like, yeah, this is not bearish at all. Okay. Now, let's see here. Looking closely. Yeah, it's consolidating underneath SMA 20, which is bullish right here. Underneath. Wicks up, wick up, wick up, wick up. That's bullish. That's bullish. But it's going past the weekly. Oh, okay. Yeah, never mind. All right. At this point, let's just skip to the fall right here. It's falling like big time. Where are you? It's falling significantly. At this point, I'm showing the 1 hour chart, not the 5 minute. I'm showing the 1 hour, and you'll see why in a second. Um, okay, yep. Master of Psychology is creating a double bottom to stop the fall from 216. Oh yeah, I thought at this time it was creating a double bottom here and here, right? I was like, okay, sure. I'm still not freaking out, right? I was like, well, okay, you're creating a double bottom. That's fine. Well, now we know it's actually a falling wedge, but this was at that moment, okay? But this is still actually bullish because what am I doing? I see big candles like this. I'm going to start to zoom out to the 1 hour, start looking left, start looking left, start looking left. Where are you relative to other lows? That's what you look for. 1 hour, no MACD negative cross, which is true at the time, which is true. It didn't cross. Keep your wits about you guys. You're going to hear me say that again and again. Keep your wits about you. Don't freak out. Okay. Yeah, if the hourly doesn't close below this number, which we now know it did, the trap is confirmed. It's just creating a double bottom. This is at the time, right? We now know it's not a double bottom. It actually went lower. Okay. So the 1 hour, still no negative cross. Still no negative cross. Still near the zero line. This is key. This is key. This is key. This will prove to be key in determining. Yeah, this is not going down any further. Keep your wits about you. Look left. So I'm repeating myself. Don't stare at the light that the market maker wants you to do. Don't just look at that red candle and just deer in the headlights. It looks like OMG. Don't stare at the light. You're going to hear me say that. Tweet that again. Okay. Here we go again. I keep talking about it. Look at the 1 hour MACD. It's creating a higher low notch from yesterday. Aha. Now you start to see me. So this is while it's still falling. Now you start to see me question what's happening. Odd. that it didn't backtest at all yet. See, now you're starting to see me question what's happening. Like, this is not typical. Why is it odd that it didn't backtest yet? And I've said this yesterday. It means its target is nearby. It's nearby. Because, and I said this yesterday, if it was really intending to go a lot lower, it's going to backtest, and fail and forcefully take you lower. That means it's not intending to go lower. I said this yesterday too, so I'm not just saying this today and I'm making up the rules as I go. I said this yesterday, and I'm calling it out again. This is odd. See what I mean? It's these little things you have to notice about the movement at the price. It's like this is not normal. I'm looking for a back test. It means the target is close. And once again, the candles are they're not getting bigger and bigger and bigger and bigger. They're getting smaller. That means it's close. It's going in for a soft landing. This is not a true sell-off. You notice like on none of my charts. I mean, literally, what you're looking at is my intraday chart right here. This is my intraday chart. This is all I look at. I have no volume profile. I have no volume indicators. Nothing at all. I just look at this. So, okay, SPY 1 hour. Yes. Oh, I switched to the, yeah, this is SPY 1 hour. Yesterday's MACD pattern didn't complete the higher low notch. That's what it's doing today. See, it kind of almost did, but not really. This it did today. Right here. This is obvious. This is not quite. This is more like a hump. I was hoping yesterday was that notch. I was like, oh, maybe, but obviously not. Still near the zero line. That's what I'm saying. You can't say it's going lower when it's close to the zero line. It is impossible. Not possible. Remember the 1 hour I told you guys in the past, the negative 20 is the bear line. You go below negative 20, you're going lower. On the 1 hour chart, you're going lower. That's it. On the 4 hour chart, you go below negative 35, you're going lower. You're making the next leg lower. You cannot go lower when you're close to the zero line. That's it. That is the only interpretation you can draw. Period. Full stop. The 1 hour shows bullish divergence. Yeah, see? Up, up, up. That's going down, down, down. I was like, there's no. It just needs to complete the notch, and that's the bottom. Mind you, I'm saying all this as it's happening real time, not realizing yet this is a broadening wedge. I didn't realize this yet at the time. I didn't realize it till much later, until somebody was kind of, I didn't put two and two together at all until much later. Because if I did, I would have said, oh, that makes, if I had known at this moment at 11:09 a.m. when I sent out this tweet, I would have said, oh, this is consistent with a broadening wedge, bottoming, or something like that, right? I would have said something like that. I would have called it out, but I didn't know at the time. It was a broadening wedge. It was creating a bottom. So I called the bottom. That's the bottom when you complete the notch. I called this bottom, not knowing it's the bottom of a broadening wedge. All of yesterday pre-market to right now is to complete the higher low notch on the 1 hour MACD. We are very near or at the bottom of this fall. This is 1 hour, you can't quite tell. Oh, 11:15, you can probably timestamp it. I can't remember. Since it's the 1 hour, I can't compare that to the 5 minute, like whenever I sent that tweet out. But I just know we are very near or at the bottom now that this notch is complete. So, SPY Weekly. I brought up the hive. October 13th, wick low, the hive. Right here, the hive. On this day, this week of October 10th, the week of October 10th. That was the week that completed the higher low notch. But as you can see, it kept making a lower low here, here, and here. That's a lower low. As it completes the higher low notch, it will continue to make a lower low, but not a lot lower low, just a little bit lower low. But once that notch is complete, that's the low. That's the bottom. And that's what we had today. Completion of the higher low notch. That's it. That's the bottom. Okay, so yeah, something I need to clear up that's what I just explained. As it is completing a higher low notch, the price always goes a little lower. Not a ton. It may feel like a ton, but it's not. This creates bullish divergence. And I talked about the hive. Okay? All AM, all morning until this very moment, the 1 hour MACD never had a negative cross below the signal line. That is also a big clue. You're not going lower. You can't go lower when the MACD doesn't cross the signal line. Well, you can kind of see it. Well, hold on. I think the screenshot is off to the right. No, it's off to the right. You can't see it. It's cropped off. It's okay. Keep your wits about you. Don't stare at the light. Okay? You see me tweet this repeatedly. Don't stare at the light. Keep your wits about you. Look left. That's what you got to do. Like when you're in war and you're under enemy fire and you're pinned down, now is not the time to freak out. Keep your wits about you. Okay. Okay, now that I've called the bottom, right here. This is where it was right here, right here. Watch for how it interacts with SMA 20. If it gets flatly rejected when it goes and then goes down, meaning if this went up and then boom, rejected down, ooh, that's not good. But if it takes back and it back tests against it, the SMA 20, that's a good sign. We all know what happened here. It took it back tested against it right here, and then it went up. It tells you MM had the strength all along. This is just a scare. I'm saying this after it just bottomed, and now it's just now touching the SMA 20. This is just a scare. They had the strength all along. It was shown. Hidden strength here. Wake up, wake up, wake up, wake up. Consolidation under SMA 20. These are the things they cannot hide. That's what I keep saying over and over again in my videos. Man, there's hidden strength here. There's something going on here. One hour SPY. Do you see that big wake up candle? Well, you can kind of see it. It's right here. So this is why I also look at here. Let me zoom in. See that big wake up? That's what I was talking about in that tweet. That's a big wake up. Okay. Oh yeah. Okay, so I talk about 1013 wick low. Now, that could be the low for the 216 downtrend. That big wick up. Well, it would have started here, but then the wick up would have ended like right here or something like that. Whatever the 1 hour or whatever it chops off the time. So, macro view, it fell, came up to reclaim 401-ish, and then rejected. So it fell. Well, here's the 401-ish right here. Fell from 216, had to be. Came up to reclaim 401, and they got rejected. Came up to reclaim 401, got rejected. Now bottoming. If the hourlies continue wicks up, this is bullish consolidation under 401. Okay, what I'm talking about here is, well, there's a wick up, just up, 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 consolidating under the line, up, up, okay? Whereas if it's wick down, like right coming from the down, see, there's not a lot of wicks down here. That is kind of small. See, this is another reason why I was like, this is not a sell-off. This is not a true sell-off. I kept questioning that the whole. I was like, nah, there's something's going on, man. Your target's nearby. If this was a sell-off, you're gonna just keep having. See, I can't like this, like a bigger wick, wick down, wick down, wick down. But instead, it's kind of small, small. It just you would have something like this, but on a much bigger scale, like a big candle, wick down, something like that, and it would be moving so much faster if it's a true sell-off. I don't have the slide. Uh, I forgot to put it in because I checked later in the morning. Let me see what the VIX is doing. Man, see, as I said in December, I said this in December. Stupid gap up. You know gap ups? A gap up is actually weakness. I said that in December. A gap up is a sign of weakness, not strength. Go look at the VIX chart tonight. Huge gap up. Huge gap up. That tells me it's like, y'all are just messing around, man. Y'all are playing around. And then what happened? The VIX just fell all day. Fell. Closing that gap. Filling that gap that it created. See what I mean? So next time you see a gap up in the VIX, that's actually weakness, not strength. Gap down is strength. Gap up is weakness. Okay? That's just how to interpret it. Now, see? Okay, well, you can it's cropped off, but it's equivalent to right here, right here, right here. This that's cropped off right here, equivalent to right here. See, not flatly rejected at SMA so far. Could consolidate under the blue channel. Yeah, right here, right here. This is what I'm talking about. This blue channel right here. It could consolidate under the blue channel with SMA 20 as support. It kind of did. See, it was support. SMA was support right here, right here, right here. Oh, I guess you can call it consolidation. Whatever. Whatever. Okay, I'm timestamping this. Did not backtest 398.59 here. This is 398.59 right here. Right here. You didn't backtest it because the target was nearby 396.25. You didn't even bother backtesting it because you were going for a target. The reverse happens. The reverse happens. To the upside, for example, if opening bell, it just rockets straight up to like here. It's like, what are you doing? What are you doing? Because you are going towards your target because you know you're going to reverse it. But you're going straight for your target because it's nearby. We call those head fakes. Up, 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 oops, reverse. That's a head fake. In this situation, down below, I don't know what to call it, but your target is nearby. You don't even bother backtesting. And that tells me you don't really intend to take this lower. Much lower, I mean. Much lower. Like big leg down. Okay? That's how you need to interpret these things. See, you notice I'm like, yeah, see, like, I'm showing these screenshots of what I see on my screen as I'm calling out these tweets. Yeah, that's it. I just got lines. That's it. That's it. I don't have too much stuff going on here. I just got a few lines. That's it. Okay? If it intended to go lower, it would massively reject at 398.59. Like the rejection at 4.1. Like this. Here's a rejection. Right here. This is the 4.1-ish range right here. Boom. See what I mean? This is a rejection. This is without a doubt. Boom. It didn't even try it. It didn't even touch it. It didn't even attempt it. It just got, oh, let's just kind of keep going messing around down here. That's why I was calling out on. I was like, something's off. Something's off. Y'all are doing something. I mean, this whole while on Twitter, a lot of you guys were like, oh my God, we're going down. We just lost the channel. You know, but I was just like, you guys calm down. Calm down. That's why I was sending out these tweets. You got to calm down. Okay, here's what I'm calling out. Futures. This is SPY futures. Ah ha 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 ha. 4-hour higher low notch. Watch out. Watch out. The 4-hour SPY futures. ESF. ES. I most definitely use that as a prognostic indicator. The 4-hour MACD, I most definitely do. You create a higher low notch on the 4-hour like this. Oh yeah, that stops the fall every time. You can go back through the June low. Every time it stops it. The fall has stopped. That is the bottom. Because when you stop this, you therefore allow yourself to create a new uptrend. Not a downtrend, uptrend. Last night I said this. It is at the conclusion of what started on 12/19. We are now 2 months later. This higher low notch is the conclusion of what started 2 months ago. Something new is starting. Finding support at SMA 20. Ha! You do have strength. You're choosing not to exercise it until now. The strength was there all along. I said that last night. I've been saying this all along. It's hiding it. All you got to do is stop staring at the light and just watch it, observe it, how it interacts with these lines. That's what you got to do. That's what I've been preaching. I haven't changed anything that I've said for forever. I say the same things over and over again. Consolidating under this. How does it find support under that? Wick up over this. It's showing you its hand. It's showing you its tell if you're playing poker. Like Matt Damon figured out KGB's tell in the movie Rounders. He's like, oh, okay. You want to eat those Oreo cookies? All right, I got you. Look closely. Back tested the blue channel line. Yeah, oh yeah, right here. Consolidating underneath the blue channel line, you found support on the SMA 20. Yeah, consolidating underneath, and you found support here under SMA 20. Okay. Oh, near. I think I said a need. I don't know. If it is reclaimed, you're not going lower. You're going higher. See, I sent that tweet out when it was just right here. And you reclaimed it. You're not going lower. You're going higher. Okay. Once I see some lift off of the blue channel, after the chop, I'm scaling more. It was right here when I sent that tweet out. Right here-ish. I saw some lift. I said, that's it. Scaling more. Look at that pop. You had the strength all along, USOB. It was always there. Despite the Red Scare. Despite the Russian Red Scare right here. You had the strength all along. So, after a big red day, you take back the EMA 50 on the same day? You consolidate like that? You got the lift? You don't even need the SMA 20 anymore. You consolidate under the EMA 50 like this? And you're going to tell me you don't have strength? At this point, 1 hour MACD above zero. Is that? No, I mean, that's a typo. That's the 5-minute MACD above zero. Yeah. 5-minute MACD is above zero. 1 hour MACD is flattening out near zero. RSI is going up. Everything's going up. 5-minute EMA is being taken, as I sent this tweet out. And that too has come to pass. It's found the bottom. See? Oh, so the same day you didn't even bother backtesting 398.60 right here. Right here. In the same day, you didn't even bother backtesting that on the way down. And now you just blow right on past it like it's a hot knife in butter. No rejection. Just boom, see ya. See? What you're looking at here, guys, it's just straight TA. You tell me, anybody, what the heck this got to do with Fed speakers talking? What the heck this got to do with hawkish talk? Or the news? Or Nvidia yesterday? Nothing. The clues are all there. It's right in front of you. There we go. I'm just talking about the MACDs. No, yeah. Uh-oh, watch out. It's starting to curl. That's it. That's it. Near the zero line. Oops. This bad boy's starting to curl up. That notch is done. It is done. 100% is complete. There you go. So, can anybody explain to me how bad news creates this intraday pattern? How bad economic news? How hawkish Fed talk? How hawkish Fed minutes? Economy's on the rocks? The Great Depression is amongst us? Tell me how that creates this pattern. How you can explain how any of those news matters. This is straight up algorithms and manipulation. No correlation with the news whatsoever. Because you cannot tell me how I can use any of that news to explain this pattern. Okay, this is good to clarify. When I say look left, I could be talking about a lot of different time frames. I could be talking about the 5 minute, 5 minutes. Look, I could be talking about 1 hour, 1 day, 1 week, 2 weeks, right? So, like yesterday, I was comparing yesterday's 5-minute MACD to the day before yesterday's 5-minute MACD. But today, I was referencing the 1 hour, not the 5-minute. The 5-minute did go make a lower low here, right here, right here. But then I said, you know what? Let's just back this up. Let's go look a little bit more macro. Where are you really? Don't lose sight of the forest from the trees. Where are you really. And when I saw the 1 hour, I'm like, you know what? We're okay. We're all right. See what I mean? Look left, but across different time frames. It matters. Okay, here I'm clarifying. Look left is code for don't lose sight of the forest from the trees. 3 principles you've got to try to follow. Don't stare at the light. Don't look at the price. Don't look at that red candle. Say, OMG. Stop looking at it. Keep your wits about you and look left. It really boils down to those 3 things. Keep your wits about you. When you're under fire, when you're under enemy fire, now is not the time to freak out. Yeah, I'm just beside myself now. No MACD bearish divergence. 1 hour MACD separated from the signal. Everything's going up. Okay, here we go. Now I'm circling back to you. Remember this tweet when I said, I don't remember the last time at opening bell it was a shallow back test to the SMA 20. Yeah, I don't remember the last time because it never happened. That's why I had to tweet. I'm like, I don't remember. From now on, this is it. Today solidified it. From now on, you must wait for the EMA 50 backtest. Full stop. No exceptions to this rule. Period. Period. And the last slide, yeah, it was actually kind of funny because just yesterday I tweeted out, I said, hey guys, you need to remind me next time anything related to FOMC, like today, Fed speak, you need to remind me that we're going to have a pump dump pump. And that is what exactly happened again today. It's like I actually knew this since last week. And I even I asked the guys on Twitter to remind me of this. And yet it always catches us by surprise. So there you have it. Please follow me on Twitter if you'd like real-time tweets intraday as I'm calling the game as I see it. Don't forget to listen to your favorite music as it helps get you into the right state of mind and into the right flow state. Please give this video a like, share, subscribe, or click to be notified when I release something new. With that, I'm Agent 00 signing off.